You're entering CNBC TV 18's virus-free studio, powered by Century Laminates and Century Ply.
Okay, there's tiny bit of recovery which is visible on the market. I mean, if you look at the Nifty, it's recovered almost 0.5% from its absolute lows. The Bank Nifty as well has recovered almost 0.8% from its absolute lows. So just a bit of recovery which is visible, but it's been such a treacherous market today that you're seeing this kind of trend. Now, Dilip, before we let you go, I just wanted your thoughts on what's happening with a stock like, say, Tata Motors. It's had a big rally, of course, in line with the kind of global rally that we have seen. And of course, it has had its own triggers as well. But is it time to take money home?
I think apart from the fact that Tata Motors came out with a comparatively better results, most important was the management commentary, which said that they are going to be debt-free very shortly and the capital intensity of the business will come down. I think that is what set the expectations very much. And of course, looking at the way there has been a good exponential vertical rise, I would say that yes, it's time to take some profits from Tata Motors and be on the side and just wait for further correction to happen.
Okay, Dilip, we leave it there today. Thanks a lot for joining us. Good talking to you about all these stocks. Like I said, the market is trying to stage some recovery. Let's see if it's successful or not. Srinivas Rao Ravuri, Chief Investment Officer of Equities at PGIM India Mutual Fund, is our alpha manager for the day. Srinivas Rao, good afternoon. Thanks a lot for joining us. Is it time to take some money off in the mid caps and large caps because of the kind of rally that we have had? Is today a bit of a warning sign? What would be your view?
Yeah, first, thank you, Anuj. Thank you for having me here. I think in the last few weeks, we are definitely seeing market being nervous overall, I think after the kind of rally that we have seen in the recent weeks. So I think near term, I would be cautious, whether it is large cap or mid cap. I think we've seen a very selective rally, in stocks, and somebody who's doing a trading, I think he has to be on top of his toes right now, given the way markets are behaving, not just in India. I think even in US, I think NASDAQ, I think for the first time in many months, have seen a correction for 3 straight weeks. So I think it's definitely time to be cautious overall.
Okay, it's time to be cautious overall. Well, for now, there is no real recovery in the market. Srinivas, hi, good afternoon. I was going through your funds, and in your top holdings, you have many pharmaceutical stocks, whether it's Sun Pharma, Cipla, Alkem, Aurobindo Pharma. They've done exceptionally well so far. Would you look to raise your allocation in these pharmaceutical names, or do you think that the time now has come to churn out?
Sonia, actually, we've been positive on pharma space for quite some time now. As we could see that the earnings visibility is far stronger in this space than most other segments. And B, I think valuations were not demanding, when we have taken position in these stocks. After this rally that we've seen in the sector, definitely valuations are no longer as compelling as they used to be. So we are looking at selectively, booking some profit at these levels. We are already, fairly overweight versus the respective benchmarks of the schemes that we manage. So to that extent, we are not looking at increasing exposure to the pharma sector, but we continue to remain positive on the sector given the visibility that is ahead and also not so demanding valuations.
Okay, by the way, this all recoveries get sold into. That's the problem for this market. Like you've seen in your mid cap fund, you also have a lot of auto ancillaries. I mean, it's you can't miss that. But we've had a big run, of course, in autos and auto ancillaries. What's the way forward?
So again, Anuj, I think if you look at the overall market, whether it is Nifty or BSE 200, the composition or the weight of auto and auto ancillaries is, I think, today at the lowest levels in the last many years. I think part of that is justified given the way one has seen the auto numbers last year, not just the current financial year. But I think from here, I think one can expect a definite improvement in the auto numbers. And this should have a positive rub-off impact on the auto anchors. And auto anchors also have the advantage of export market. So to that extent, we see a select opportunities in the auto anchor space. Also, you can't build positions in these companies. Auto anchors, most of them are mid cap to small cap. You can't build positions overnight. One tend to build these positions over, let's say, 1 to 3 months period, looking at what one expects over next 6 to 12 months or 18 months. So I think we are in the process of building our position on auto anchors as we are incrementally positive on the auto anchor space.
Okay, well, a lot of these stocks have actually seen a huge run up in the last 5-6 months. I mean, look at Ashok Leyland, it's gone up 60% in the last 2 months, Escorts as well. The other stock I noticed in your top holdings is India Mart, and what a phenomenal rise it's been for some of these digital infrastructure stories. For a stock like India Mart, is there still more to go? I mean, is this a structural play, or do you think the story is played out in its entirety?
Sonia, you know very well that we don't comment on stock specific, but I think the broad themes that are playing in the market, whether it is here or internationally, is this digitization and financialization. So in the digitization, I think, the lockdown has compelled many of the manufacturing firms, especially these, SMEs, to look at digital space, than the way they were looking in the past. Small enterprise was avoiding going online or internet. They believe in doing a physical transaction. But in the last 5-6 months of lockdown has compelled many of them to go online, on board. And the companies that you mentioned, these are offering solutions to SMEs in this time when you can't do physical marketplace. I think that is where there is an opportunity. That is where the shift that we are seeing. I think we've seen McKinsey coming out with a report saying that India has leapfrogged almost 5 years on the digital era. So companies offering solutions in that space, I think would continue to trade at a significant premium to broader market.
Okay, we will leave it there today, Srinivas Rao. Thanks a lot for joining us. It was